In this video I want to talk about the VIX index. I'm sure every trader's heard about it. It's probably one of, if not the most misunderstood and misrepresented indices or areas in the trading industry. And I'm going to highlight something from December. Again, I'll link to a Substack newsletter that I wrote about this. It has this content in more detail. Which sort of it goes to explain again about the misrepresentation and the confusion that the VIX index generates. And I'm always interested in this. There's a lot of people call themselves volatility and VIX experts out there. Frankly, there's often a lot of misinformation and misdirection about what the VIX is. And this is going to talk about one specific example. So going back into December, what got me was a tweet that popped up on my timeline from someone that I usually regard, quite well, and it was VIX having a big day, up over 7%. Now, the first thing here is if this was a stock or certainly a currency or bond and it moves 7%, you would say that's a big move. But one thing you have to understand about the VIX index is the way it's calculated. The VIX index is what's called a variance swap. It's not a tradable product. Okay, you can't trade the VIX index. You can trade VIX futures, but VIX futures are different from the VIX index, and that's a whole different story. But the VIX index is a variance swap. It's calculated from using a range of roughly at the money options around about expiry of 30 days from the S&P 500. And there's a bit more detail about that calculation in the Substack newsletter. But the thing to understand is it's not a tradable product. A 7% move in a stock would be a big move, but is a 7% move in the VIX a big day, as was claimed by the tweet? Well, firstly, the VIX at that day, if we go and have a look at it, it moved from 21.1 to 22.7. Already, I think, I would suggest that if you understand how the VIX is calculated, you'd understand that the move from 21.1 to 22.7 is not a big move. But to show that in terms, we can actually have a look at what does that represent? What does that 21 or 22 figure for the VIX represent? So because it's calculated off of 30-day options implied volatility, what that 22 or 21 number actually represents is a range. It gives us a range, an expected range for the S&P 500. But the raw number gives us a range for a year, because implied volatility is an annualized figure. So there's a calculation that we can make to turn that annualized implied volatility number, or VIX number in this case, into a number for 1 month. What's the expected range for the S&P 500 for 1 month? And the reason we want to change it into 1 month is because 30-day options are being used, so it makes sense. If people are trading options with a 1 month roughly expiry, it makes sense to take that annualized number into 1 month. And what we get is that the 21.1, the original, where the starting VIX was on that day, that gives us a range for the month for the S&P 500 of roughly 6.1%. The move up to 22.7 increased the range for the month from 6.1 to 6.5. Now, bearing in mind that the S&P 500 at this time, over that sort of day or two, had been moving by 1 to 2%, increasing the expected range of the index by just around about 0.5% for the month is not a big move. It's not a huge change. So the big move of 7%, 7% in a stock or other thing would be a contract would be a big move. But in the VIX, that's not a big move, because you should not be looking at the VIX in percentage terms. And my reply to the tweet was, please don't quote moves in percentage terms for the VIX, because it's a variance swap. You're going to be misled and misguided by looking at it in percentage terms. I got a reply, and you can see the replies in the Substack, and in the end I just sort of gave up because it looked like the guy didn't understand what I'm trying to say. So really important to understand, what is this product? How is it created? And what do the moves mean? Now, even saying that, what if the VIX moved by 20%? Would that be a big move? Again, because it's a variance swap, we have to think of it a little bit differently. So for example, what if the VIX moved from a reading of 10 to a reading of 12? That would be a 20% jump. But because of what this index is, you know, a 10 reading in the VIX is a very low reading. A 12 reading in the VIX is also a very low reading. A move from 10 to 12, you may see headlines on FinTwit saying 20% jump in the VIX. But really, it just means that people have gone from an extremely low expectation of volatility to a just slightly less extremely low expectation of volatility going forward for the S&P 500. I would not say that's a big move at all. So be very careful in how you analyze these products. If you're interested in learning more about the VIX and the VIX futures and the VIX products and the differences between them and how to sort of look at them, I have a whole section of this in my advanced options course at learnoptions.net. If you're interested more about this particular example, I explain it and the calculations in more depth on my Substack. There's a link in the description as well for you to click to that. So be very careful when you're looking at the VIX index. It's very misunderstood, very misrepresented. And I hope that this sort of both the course module, this video, and the Substack newsletter all together will help clarify what this index really is and how you should use it.